Hello, investors and traders, and welcome to the weekly market report. I'm AJMonte, Chief Market Strategist with Sticky Trades. Not much has changed since Wednesday. This is a daily candle chart of DIA, and you can see right here we have a drop in volume. Again, the market's closed at 1 p.m., but with more than half of a regular trading day behind us, the volume didn't even reach the halfway mark. So we're chalking that up to a lower volume day on the way up. And if you follow my trading checklist, you'll know that that is a sign of weakness. Now, if I back out just one little bit here, you'll see that we have this resistance area up top here from July. We have a pretty steep angle in this rally since the beginning of the month. And so what I'm doing is I'm not putting a target line, I'm putting a target area. It's going to be a little bit better for our option traders, especially those who are looking to put in their short strikes for the calendar spreads that they do. So I'm looking for a gap fill down here on DIA either next week, and I know that would be extreme, or the week after. And so you look down below and the stochastic is crossing with a sell signal. We still have a negative divergence down here from the CCI. That means we have higher price highs, but the highs on the CCI are still moving lower. Moving to IWM, you can see that today we had an up day. Yes, we did on super low volume. Again, not even half the volume of a normal day. And there we go again. The stochastic is still hinging lower. The CCI, believe it or not, even though IWM was up 0.67%, the CCI is still going lower. Those are negative divergences that I recommend people do not ignore. I call those bearish flags. When they're positive divergences like we see back here, when I called the upswing, that is a positive divergence that I said we should not ignore. And back here as well, we had a positive divergence, higher lows with lower price lows, and that resulted in a really nice rally back here in October. So we still have a downside gap in IWM. Let me just shade that area for you right there. I normally don't do that, but I kind of like that because it gives you still that visual aid you need to see where the gap zone is. And as you may know, if you follow my gap fill rules, 80% of gaps fill, and then after they fill, 80% of the time you get bounces or retracements, especially if they're downside gaps that are filling. And so let's move on to QQQ. That's the tech sector right here. We had a down day in the tech sector. We have an official pivot point here. Let me magnify that for you. We have a lower high, lower low on the price action, and that volume didn't even come close to being at the halfway mark. So that's a super low volume for tech, which actually surprised me because we have a lot of data that will be coming out this week. We'll see what happens with online shopping. We'll see what the final results are for Black Friday. Those numbers will probably be released midweek or maybe even early next week. So that will absolutely give us a handle on what the consumer spending looks like. And I'll get to that in a moment. But again, downside gap is still wide open right there on QQQ. So I'm going to shade that area for you. Look down below. Same story. The stochastic is heading lower. The CCI is pivoting lower with a more severe pivot here, and we have this wide divergence from that 20-period moving average. Now look at SPY. We have another resistance area right here. This week, I'll magnify this for you here. Let me just get that expanded because something significant happened here. This gap back from July filled on Wednesday. That's very interesting because, like I said before, 80% of the time after gaps fill, we get reversals. So if that's an upside gap that's filled, we have an 80% chance that the price will reverse and go lower. But at the same time, we have this gap below the market that will draw the price lower. So we have that push and pull of open gaps and filled gaps acting. And this is one of the guarantees that I made 2 weeks ago, is that's an exhaustion gap I gave a guarantee that that gap will fill. Look at that long stretch of green right here. We have 6 green candles in a row. That's known as a stale green light. And the volume has been consistently dropping on the way up. Very interesting that we see that. If you're brand new to charts or candle charting, make sure you visit the Sticky Trades website. We have a free 15-day membership that you can take advantage of and get some of our educational videos to learn a little bit more about how to use these charts, especially for risk management. So I'll talk a little bit more about that at the end. Make sure you click that subscribe button all the way down to the right, the bottom right. It's very easy to do. Following us on YouTube is absolutely free. I go through the repetition of looking at charts, looking at the signals, following my trading checklist. And I think you'll get a lot of value just out of the YouTube channel alone. So that's SPY. I'm looking for that gap to fill. Looking at the VIX, I just want to take a little time on this one because we have closed below this key support level on the VIX. You see this? Now, this is not just any support level because if I go back and look at the monthly chart, and I commented this on Wednesday, this is the all-time lows for the VIX. That's since the VIX has been created, those are the all-time lows. And you have to understand that the VIX is, for the most part, it's inversely related to the S&P. So if we're expecting the VIX to rally from here, and I am expecting it to rally from here, then you can expect that the S&P would pull back and go the opposite way. And that's why I'm talking about these downside gaps so often, is to make sure people are very much aware of what's happening there. So that is something that's very significant. The VIX is a leading indicator in my book. They also call this the fear index. When the market becomes complacent, investors relax. They're not really moving in and out of positions. They're not really buying all that much either, but they are more or less sitting on positions, and that complacency translates to a low VIX. Now, when the fear starts to move in, the VIX starts to rally, and that's when prices start to drop because greed and fear are what moves the market, but fear is the more powerful force between the two. So look at that wide divergence we have from that moving average. Look at the oscillators pivoting up, even though the VIX was lower. Look at that CCI pivoting up. Stochastic is pivoting up. Pretty amazing. And so let me talk a little bit about silver because I am in a position right now where I'm out 5%. I sold out of 5% of my position on that shooting star, and I posted that to X, formerly known as Twitter. And we're approaching this resistance area up here. So I'm going to draw another shaded box that's going to show what my sell area is going to look like. I'm looking to sell 5% more of my position right there. I'll add a note after I get done with this recording so we'll know what that means, and that'll carry forward on my chart. But when silver gets up to that level, look at this wide divergence that we have between the price and the moving average. You see this? This is a wide divergence here, and the oscillators also showing negative divergences. So I'm looking to sell more to generate more cash so that when silver drops back down either to this area as a roll reversal or down to this moving average, I will take that cash and reinvest it back into a bigger silver position. And I try my very best to give the public notice before I'm actually doing the buying or the selling. And that way our members and even folks from the general public can follow along. And if you want to ghost my trades, that's fine. If you want to copy right along, that's fine. Or just use it as a learning experience, that's fine too. But I make sure I do my very best to make sure that gets out there. So stay tuned to Sticky Trades and stay tuned to my Twitter page. Now let's talk a little bit about the geopolitical news that's out there. Consumers are pulling cash from their retirement accounts, and this is all happening while they are still stressed financially. You could read ahead in this article. It may even be possible that this season people are going to stretch their credit cards even more, pull from their retirement accounts even more to buy gifts and shop for their families to make this a merry season. We'll have to see how those numbers work out. But this is a very interesting bit of information that came out earlier this week that's not being reported. Again, I try to report on the things that are not being highlighted in the financial programming. And so Citi cuts more than 300 senior manager roles. This is interesting. I've been talking about the banking sector and the threat of a possible part two of the banking crisis. I think that will happen. The writing is on the wall, and I think that it's just a matter of time where you start to get a domino effect affecting the smaller to mid-sized banks and then eventually affecting the larger banks. This is the slide that caught my attention more than anything. Check this one out. Existing home sales slide to the lowest level since 2010. This is 13-year lows right now. And that is a downtrend. If we were looking at this as volume on a candle chart or price action on a candle chart, no doubt that is a downtrend. Even going back to the beginning of 2022, we have dramatic drop in existing home sales, and that will eventually take its toll on the economy. And we'll have to see how that one plays out. Remember what I said about sticky trades? We have a 15-day trial, Black Friday special coming along. If you come in, you could set up a free membership and you could tag along and look at some of the videos I have, the webinars. You could look at some of the alerts that I put out in the trade publications, and you can take control of your money. And even if you're not an experienced trader, go to Sticky Trades and just learn. It doesn't cost anything to watch what I do. If it comes time where you're comfortable putting your money at risk in the market, then go right ahead. One other thing, this week we put out some trade publications. We do take long positions, even though I'm bearish long term. We do look at the signals, and I look for buy candidates from time to time. And the couple that we put out this week are doing very well. And of course, those who are trading NVIDIA on the options side are doing extremely well with that put spread we put on. I can't give too much of the details on that one, but let me just show you NVIDIA and how this works out. We had a forecast that was lower on NVIDIA, and I was forecasting lower after the earnings, and the downside target was 476.42. Today, the low hit 477.45, but our members actually wanted to drop closer to 470. That will be a home run of a trade on that spread that we have. And again, if you're not an option trader, or if you know very little about options, you could plug right in and watch my videos because I teach through repetition. And this could very well turn out to be one of the best trades of the year. We're already up significantly on this one in just a couple of days. I think it's just going to get better from here. So again, have a very happy Thanksgiving weekend, and I will talk to you next week. So long.